Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. I teach trading at Trading University. First market we'll take a look at will be the Australian US dollar, Aussie US dollar. The pattern I have highlighted on all these charts you're going to see is that 10-day pattern, because that's an important pattern for us. Essentially, if you can shift that 10-day higher, which you'd need a couple closes above here on the intraday on a 4-hour chart, then that's going to open up the door for short-term traders perhaps to start going in on the long side. At that point, if you had both your 5 and your 10-day up and you trade that 5, 10, and 25-day, you trade those lower time frame patterns, the majority of patterns were higher, and then you're going to focus on the buy signal. On the other hand, though, 10 days still down, so you're at resistance. So for now, we're still focusing on the short side, and you can see all those higher time frame patterns still down. Also, I've said it many times. Aussie's probably in the process of carving in a longer term bottom here along that the 69 level there. So that could claw on for a while. As I said, the chart gets smaller down here. Not a lot of room down there with that pretty stout support right there. Also, you have to address the horrible events that happened in Europe, that happened in Paris. That's probably going to create dollar strength, and that's definitely not going to benefit the Aussie. So it'll be very interesting to see how the markets open Sunday night, whether that dollar strength, whether the horrible events in Paris strike the euro so hard that the repercussions of that sweep the Aussie below that critical support down there. So very interesting to watch what happens in the market Sunday night based on the terrible events in Paris. I've always said that the chart is your most accurate reflection of the underlying fundamentals. In this case, the markets haven't been open since this terrible event, so it's going to be really hard to gauge that. So very important to see what happens on Sunday night. Next market, the dollar Swiss. You may see Swiss strength against the euro based on those horrible events. On the other hand, we don't see Switzerland as being insulated as it has been in the past historic conflicts there. So we continue to be bullish on dollar Swiss here. Again, we'll have to see how those markets open Sunday night. But based on how everything's aligned here, we would think that a serious weakness in the euro will be reflected as dollar strength here. Dollar Swiss being the market, we think that you'll continue to press higher. Here you'll probably take a look at 102.5, resistance at 102.5 in a hurry based on this news. That's a big move, but it's a big horrible event that we've seen, and markets tend to reflect that. They tend to price that in very quickly. Here's the dollar index. You see that all-important 10-day pattern I have marked with the green box. That's higher. Again, the reason I'm marking all these 10-day patterns is you'd have to close below support right there in order to shift that. You shift the 10, basically your 5 and 10 and shift simultaneously, and that'll open the door for short-term sellers, intraday selling. But as you can see, market's still very strong. Again, we'll have to see how the markets open Sunday night, but certainly the knee-jerk reaction from our perspective is almost certainly going to be dollar strength, euro weakness. So it'll be interesting to see if the dollar takes out the March high, if the dollar can take out the 101 level early this week. The euro itself, we suspect here's where you're really going to see weakness, and we think it'll be exaggerated by the patterns already in place. The euro had already shifted its secondary pattern down. All the patterns lower here, we think you could see 105 in a hurry off of this terrible news, and it wouldn't surprise us if you even break down through that. So we think you'll probably see par in the euro sooner rather than later. We see what happened in Paris is very similar to what happened in 9/11 in New York City in 2001, where it will shut things down. I mean, people they're not going to go out and spending. It's not as though the European economy was booming as it was. It was kind of inching forward, but it's such a terrible event that it'll shut things down. It'll shut things down for a while. There's no silver lining to this for a long time to come. So we think that'll be reflected in much lower prices in the euro. And again, you'll probably see power. You'll probably see the 100 level sooner than you otherwise would have. The gold market, this really could be the death knell for gold. it'll be interesting to see if you get some kind of a reaction higher. In the past, gold, kind of the fear indicator, you would have thought that you'd see an uptick here. It'll be interesting to see. Here's the 10-day pattern on the gold. You'd have to eclipse 1133 or so to even interest your shorter term traders or traders who may still be following gold, trading gold. But that's a long way higher. So the reason I say it could be the death knell, if you do not get a reaction higher in gold and it slips below the 2015 low, then that really just opens the door to the longer term. Pan out to a monthly chart, we see just gold beginning that slow grind lower, down around the 800 level. And it'll really be lights out for that market right there. Volume will continue to drop off. Interest will continue to drop off as gold just kind of slips below the waves and does that slow float lower that we're anticipating overall. So Sunday night, so important for all of these markets to see what the initial reaction is and the extent of that reaction. That'll give us a good look at where we're going to go for the rest of the year here. Last market, U.S. interest rates. U.S. interest rates on the daily chart, you had that big breakout, really a harbinger of higher interest rates in the States here, harbinger of continued dollar strength. It'll be interesting to see if you get a flight to quality here, a flight into dollars. That's what we would anticipate off of the terrible terrorist event in Europe, in Paris. So we would anticipate perhaps shorter term, a little backup in rates here as treasuries trade higher, interest rates trade lower. On the other hand, you've got big support down around 2.14% or so. We think the pattern here, the trend in treasuries is set here, carved out pretty good. And the big question for the Fed will be, do they raise interest rates now despite the horrible event in Paris? And my thinking overall would be that yes, they will. They will do it just to stick to their plan, and so that they, it can't be said that the terrorist attack actually had the effect of changing Fed policy. They don't want to give that impression at all. So I would think that the U.S. will go forward and raise rates in December. Thank you so much. My name is Jay Norris. I teach trading at Trading University. We'll see you next week.